The roll-up is back. We are here. We're live. Shout out to the team behind the scenes, absolutely killing it on a day-to-day. It'll just be me hosting today. Andy's out. He's got some important family business to attend to. But the show must go on. So we will rock and roll on. Markets are continuing their V-shaped recovery. A little bit of a slowdown today. We're seeing some turbulence in the Trump tariff-China trade war. Trump tariff trade war. That's a mouthful. We've got a great show today. We're going to get started with a few banger guests. We've got DK from the DeFi Dev Corp. This is a Solana digital asset treasury company designed to accumulate and compound Solana. Not only are they buying Solana and keeping it in their treasury, they're also going to deploy it on chain. So we've got all kinds of fun that is going to be taking place on the roll-up today. We're also going to be discussing the Decypher podcast with my friend 𝘗𝗂𝘗𝗏. You guys might see a bit more from Jack here coming up soon. We're going to have him be more regularly appearing guest on the show. So stay tuned for Jack. He also has a nice bird's eye view of the space. Because he talks to quite a few smart people on his Decypher podcast. Then we've got Money Moves Fast presented by Polygon with none other than John Egan. He's a recent hire from Polygon. He's now the chief product officer over there. Sure. Still getting settled in. He's only been there about 3 or 4 weeks. From Stripe is where he was at previously. So very interesting story. Obviously, Stripe has big things that they're cooking in the crypto space now. But John decided to leave Stripe and join Polygon and endeavor on their stablecoin and payments focus for Polygon moving forward. Then we've got Rumor Mill. You guys love Rumor Mill. We've got a couple of items hot off the block. So we're going to be talking about those on Rumor Mill. And then to close up, we've got AvaLabs Chief Business Officer, John. AVAX also has a digital asset treasury company. So these DATs are continuing to print, and we're going to get into all of that and more on today's show. Lots to talk about. So we're going to get started in just a few moments. We're going to get DK from DeFi Dev Corp up in a little while. In the meantime, we're going to cook. We're going to get some love happening on Twitter. We're going to boost the stream, make sure that everyone knows that we are going live. And we're going to continue to cook. So let's blast this far and wide. We've got DK behind the scenes now, so we're going to bring him up once the team has him up. We're going to be talking about Solana and the digital asset treasury company Wave. Multicoin and 𝘗𝘂𝘗𝘏 have certainly made themselves known in this space, but we're going to be talking about what all of the possibilities when it comes to these digital asset treasury companies are. DeFi Dev Corp is also leading the way. They were the first ones to pioneer and move Solana into a digital asset treasury company and also leverage it on chain. I think there's all kinds of very interesting on-chain strategies that they can embark on to compound their Solana holdings. So let's get DK up. Let's get him on the show. DK, there you are. Welcome to the show. It's good to have you.
Thanks for having me.
Absolutely. It's a pleasure. Man, I think, first off, what a wild weekend. It's good to see that you've survived. For a little while there, it was a little shaky. It was like, oh, what's going on here?
The whole team has operated in crypto for far too long when we didn't have too visceral a reaction to it. I mean, yes, our thoughts are with everyone who was negatively impacted, but for the most part, like, we stayed fairly calm and measured. And most of our discussions over the weekend were, how aggressively should we be buying?
Exactly. And that's what I think people, when you have a more long-term mindset and you've been around in the space for a little while, you can kind of understand, okay, these are some of the things that tend to happen. And you can really flip the mindset and become a buyer when others are fearful. And people were certainly fearful. You saw that in the crypto sentiment online. But those who have been here before, those who are thoughtful, decided to buy during that time frame, and look where even just after a few days, look how that panned out. So what was the feeling in the room amongst your team when that kind of thing happens? What were some of the outcomes of the conversations that you guys had in the heat of the moment?
Yeah, it's a good question. I mean, the first step was we just had to figure out what it is that actually happened, right? And there were, of course, a number of initial theories, hypotheses out there. But the first thing we did as a team is just try to connect the dots as plain and simply as possible. So obviously, ultimately, the conclusion we came to was you had BTC at historically low volatility levels. People grew leverage in that kind of environment. There's very clearly more cross collateralization today versus 5 years ago. Trump goes and tweets, and the cross collateral gets nuked, and the markets aren't very deep there, right? So when I look at something like that, that is, again, unfortunate, but still more of a technical issue rather than reflective of the whole cycle's due to roll over. There's something problematic with macro. It sort of felt like a good time for us to step in.
And when you talk about the cross margin, right, and the cross collateralization, could you just expand on that? Like, what, this is something that I think we saw off chain. FTX kind of had their tentacles in so many of the different companies. We saw, Three Arrows Capital. All of these guys were kind of backing one another. It was just this merry-go-round of credit. Is that all, now you're suggesting that is also happening with respect to these exchanges? But what is there similarities and differences that you can?
No, I would say the difference is point blank, or like when you think about all the leverage crossover that happened a few years ago. I mean, it was like a domino effect. One shit falls, and then everybody else falls, and then all the skeletons come into the closet. And again, we viewed this as just more technical, obviously impacting a whole swath of traders across, mostly retail. It was interesting to see the I'm going to say the takeaways on the DEXs versus the centralized exchanges coming out of the weekend. But again, our job as a digital asset treasury company is to just be very thoughtful and careful with how we manage our balance sheet. So, once we got to that diagnosis, we felt fairly comfortable with the situation.
Love it. Maybe you could tell us, I mean, you guys are obviously in the SOL world. You've been here for a long time, coming from TradFi. You guys are veterans in the space. What was it about Solana in particular that, we'll start high level. Why did you choose Solana? And then I'd love to get into some of the strategies that you guys are employing to then go and compound the Solana that you have in your treasury and maximize value per share.
Yeah, great question. So the simplistic answer here is that we think Solana is going to 50x from here to $10,000. And we can walk you through that price target and that math a little bit here if you like.
Solana to 50,000. Let me just
Solana to 10,000.
To 10,000. So okay,
roughly a 50x from
I see. Okay.
And of course, at the time that we started buying, it would have been somewhere, closer to like 75 or 80x, right? Because we initiated the strategy come early April. As you noted, we were the first Solana treasury company in the United States. We were actually the first non-BTC treasury company. And I think there were, again, two primary reasons we chose Solana. One, we're obviously bullish on the underlying asset SOL. But two, we often got asked the question, why wouldn't you choose BTC, right? Obviously, Michael Saylor has done a phenomenal job over the last few years familiarizing institutions with BTC as the apex asset and as a sound treasury asset. The issue, of course, is that launching a BTC treasury vehicle in the United States is kind of like me handing you a football and asking you to run it down a field, but there's an NFL lineman standing in front of you, right? And that NFL lineman is Michael Saylor and MicroStrategy. So we had, I'm going to say, no desire to go up and directly compete against them. So we were sort of left with the option of launch a BTC vehicle somewhere overseas where maybe the competitive field was less crowded, or choose a different treasury asset. And in this case, we chose SOL, which has, as we indicated, a lot of upside, but also it's a productive asset that kind of helps you evolve the MicroStrategy model a bit more.
Love it. Love it. Yeah, I mean, Michael Saylor certainly cleared the way. I think, you can think of him as a linebacker, like he's trying to tackle you if you're going up against him. But in the same way, he's also he's also blocking for you guys, right? Like, he's kind of clearing the way. He established the original digital asset treasury and MicroStrategy, accumulated all this Bitcoin. I think this is where we can move a little bit more quickly. MicroStrategy, they've got a complicated way of kind of compounding their Bitcoin, but Bitcoin just doesn't have the same capacity for on-chain compounding and on-chain DeFi mechanisms that of Solana, right? And so this is where I think really the secret sauce of DeFi Dev Corp could come in, and just generally non-Bitcoin asset and digital asset treasury companies could enhance their strategies. And so I'm curious, when you're thinking about the DeFi landscape that exists on Solana today, what are you guys currently doing, and where do you think you're going to end up when it comes to deploying some of the capital that you guys have in the treasury?
Yeah, it's a great question. And maybe even just taking a step back, one of the hypotheses we had fairly early on was this idea that the MicroStrategy model was a necessary but insufficient condition for success, right? So you had to be able to tap the capital markets playbook in some capacity to get the flywheel going. But if you were just relying on that or just trying to copy paste Michael Saylor, it wasn't exactly going to get you very far. And sure enough, here we are 6 months after we kicked off our treasury strategy. MNAVs across the space have materially collapsed versus where they were sort of in mid-July. And for those who follow the digital asset treasury space, MNAV is sort of the lifeblood or fuel by which a treasury company can tap the capital markets to keep acquiring more of the underlying asset. So this brings us to our activity on chain. We had this just very simple view back in April that if we could put our treasury to work in some capacity and take advantage of Solana's native yield, then we would actually have some organic way to keep acquiring more of the underlying asset over time. And we sort of like to stack rank and think about layers of yield in a few different tiers. So you can think of tier 0 as you're a Solana treasury company, you follow the MicroStrategy playbook, but you're not staking, right? And that wouldn't really be a great value proposal. Obviously, users who are into crypto, can find it fairly simple to go onto Coinbase and purchase Solana and stake it themselves, right? So you're not really doing anything value additive if you just did that. Tier 1 might be you're a Solana treasury company and you do decide to go stake on Coinbase, but you're paying third-party costs. You don't own the infrastructure yourself, obviously. And if you're not engaging in opportunities on chain, you're not maximizing the potential yield that you could get on your treasury. So then you start to get to more interesting areas, which is what happens if you own your own validator infrastructure? Well, now you're not paying costs to a third-party provider. In our case, we actually generate roughly 20 to 30% higher average block rewards. Shout out to Parker, our COO, who's been operating Solana validators for several years. He runs a modified client, not the standard client. So we can, in addition to not paying the third-party costs, we can squeeze out a little bit more yield that way. And then, of course, there's what you started this question with, which is how do we deploy our treasury on chain to take advantage of various yield opportunities across Solana DeFi. And today we have roughly, call it 10% of our Solana treasury on chain today. Our hope is actually to be able to increase that in the future, though we haven't indicated just how aggressive we'll be.
Beautiful. I mean, that is really what I think unlocks a lot of the capital formation power that is enabled by these treasury companies. Buying is one thing, but actually putting your money where your mouth is, going and staking or going and using the applications that live on these chains are then going to make the ecosystem itself more valuable. And whether it's, without shouting out too many, Solana projects, the ecosystem more valuable is then going to create this flywheel effect and value accrual back to the base layer and make Solana itself more valuable.
Correct. So the way we viewed it was, in addition to this being a yield or revenue generating opportunity, again, on an organic basis, which will become increasingly important over time, particularly as MNAVs have collapsed and as we get closer to an eventual bear market, deploying our treasury on chain gives us a way to control our own destiny, right? If the ecosystem thrives, we thrive because Solana will thrive. So it sort of felt like a very simple conclusion to draw to. And again, our hope is to be able to deploy more aggressively in the months to come.
Love it. What's the you guys have a thesis, and there's other treasury companies and other companies out there that have a similar thesis, sold to 10,000. What's the relationship like with these other Solana treasury companies? Ultimately they're helping kind of steward Solana in this direction. But the capital ultimately finds its way into, some or one of these venues. So what is the dynamic between treasury companies?
I would say that we've actually had nothing but positive interactions with the other Solana treasury companies that we've had active conversations with. Our view is simply there's obviously additional buying demand with these treasury companies coming to market. And again, that is a net positive for the ecosystem. It is a net positive to have some of these treasury companies deploying their assets on chain, right? It speaks to the crypto ethos. It again helps the ecosystem thrive. But more importantly, you get different flavors for everyone telling the story just a little bit differently. And I think that's particularly important because Wall Street's level of understanding is, let's just say, not quite there. I remember the first pitch that I gave early on in the DeFi Dev Corp days, and it was a conversation much like the one we're having right now, where I said, hey, Solana is this productive asset. It's the fastest and cheapest layer one. We can stake our treasury to our own validators. This is going to be awesome. And the questions I got back were, what's a layer one? What's a validator? I don't even know how staking works. Can you tell me how staking is different on Solarium versus Ether? And I was like, okay, well, this is that right there is all you needed to know in terms of general Wall Street's level of understanding. And there are varying degrees, right? There are certainly some folks who have done their homework and are asking more in-depth questions. But my experience for the most part has been you have to meet people where they are on their level of understanding. So having more Sol treasury companies out there is undoubtedly a good thing because everyone will have their own unique style and way of telling the story.
Yeah, absolutely. And I'm curious, when you're going through and you're having these conversations with some investors on Wall Street, and you're kind of educating them on the opportunity here, have they started to come around? What are some of the things that click in their mind? Is it internet capital markets? What is it that really, when you see that glow in their eyes, that light bulb moment, what is it that gets them there?
Yeah, it's a great question. I actually would say internet capital markets is more of a confusing term for most of the folks that I chat with. If you just throw that at them initially, a couple things. One, if they don't even know what an L1 is, they're sort of left scratching their heads. But two, I find that people generally just focus in on the capital markets component of that piece. So then they're automatically just focused on trading applications, perps, things like that, right? And what I've tried to migrate people towards is this idea of Solana as infrastructure for all of global value transfer. So this is, of course, capital markets. This could be live streaming. It could be agentic AI. It could be video game transactions. And when you start to frame Solana as infrastructure, I almost tell them it's like being able to invest in the internet itself, right? Mm-hmm. But I have to explain it in terms of the outcomes that Solana actually drives, rather than diving deep into the architecture and what makes it better than Ethereum and trying to explain like why Alpenglow is a big deal or why multiple concurrent leaders is a big deal and things like that. Because the moment you get into that, you've again mostly lost the plot. Versus if I tell people, hey, this shit is really fast, mm-hmm. It's incredibly cheap, right? You need only look at this last weekend as proof points for, for both of those points. Anyone with an internet connection can access it, and it's really, really scalable. Then I would say the gears start turning a little bit, and they start asking some questions about, okay, what are the types of applications that are out there? Can you give me the proof points on why this thing is really fast or really cheap? And we can start talking about TPS and average fees and things like that. But again, you have to frame it as these are the outcomes that it helps drive. It is an infrastructure layer, and then peel back the onion from there.
Yeah, and we're realizing that each of these companies on Wall Street, they each have their own entrance vector. You guys are going out and you're doing some of the education, and that's really beneficial for the entire industry, whether it's Bitcoin, ETH, or Solana, or anyone else. You guys are doing some of that preliminary education that, again, we try to do on this show as well. Another entrance vector that is kind of taking the world by storm, a lot of people have heard about it by now, is stablecoins. And I'm just looking at the news wire coming in now. Tether linked USDTO and their gold peg launch on Solana via layer 0. generally, what do you think this means for the Solana industry as we're continuing to get more stable coins? We're getting more real world asset pegged assets. How do you think this is going to unlock a new group of capital to enter the Solana ecosystem in particular?
Yeah, great question. Whether you like it or hate it, the whole mantra of stablecoins or the chat GPT of crypto obviously really stuck and clung in investors' minds this summer. And, you know, we can thank Tom Lee for that quotation, right? And I know that a lot of people cringe at, you know, Tom Lee's arguments. And I saw Andrew Kang's post about Tom Lee's ETH thesis is retarded and things like that. But one of the great things that he has done, again, he's been able to distill outcomes down for the average investor. And when I think of stable coins, I mean, that is probably, I remember when Circle went public, I was getting like crazy numbers of texts from all my former buy-side buddies. I used to work in a hedge fund for about 8 years. And it was the first time I sort of found Main Street, Wall Street, very genuinely interested in crypto outside of Bitcoin. Was this as like an application or a use case? So when people sort of point to stable coins as, you know, is this a positive catalyst? I tell them, of course it's a positive catalyst. And the little add-on that I've been using is if stable coins are the chat GPT of crypto, then Solana is NVIDIA. And then again, the gears start turning for people and they're like, oh, that starts to make sense. And they say, you know, can you point me to some proof points for that? And you need only look at stablecoin TVL on Solana, which has grown somewhere north of a 200% CAGR over the course of the last 5 years. And has clearly been the #1 share gainer over the course of the last few years.
Yeah, it's funny to hear these analogies, but it makes sense. Solana is the infrastructure for the global transfer of money. And so if stablecoins are the ChatGPT moment for crypto, NVIDIA is powering a lot of ChatGPT, obviously providing compute, these data centers. They are the infrastructure for ChatGPT. You need something like a Solana or an L1 in order to support and power stablecoins, which is the on-chain version of ChatGPT, effectively, right? So
yeah, that's absolutely right. And then, of course, the other area folks have been chatting about a lot has been tokenized equities. And, you know, you need only look at the amount of volume done on tokenized equities by Solana year to date. I want to say it's somewhere around like 800 million in magnitude, give or take, which is more than all the other L1s. So again, some very early positive proof points on some, I'm going to say, very powerful thematic areas that investors are closely watching.
Could you expand on that? Like, where do you see a lot of the growth happening that you're talking about there?
I mean, we obviously just pointed to, you know, equities as this example, but again, this is where I think it comes back to, do you have a chain that can handle the throughput for a world that is going to tokenize all of its assets eventually? You know, we were looking at some estimates recently, don't quote me on this, but over the course of the next 5-6 years, the forecasted growth of tokenized assets is set to literally explode. So there's just, you know, whether you are a one chain to rule them all type of person or not, it's just hard to envision a world where Solana isn't going to materially capture a lot of that share.
Yeah, absolutely. I'm seeing more and more companies, tokenization companies. Obviously, Securitize is doing quite well. We had Superstate on the other day. These guys are ultimately accelerating price discovery. And I think, you know, people have some different terminologies for this. Generally, you know, people refer to it as hyper financialization. I think in finance, it makes a ton of sense. You know, I'm not saying that we want to be, you know, gambling on, you know, what fruit in our refrigerator is going to go bad next. But, you know, when it comes to opening up more liquid markets for private companies, opening up price discovery for creator markets, these are the sorts of things that I think make a ton of sense, particularly in this industry. And, you know, we're going to see 24/7 Monday, you know, potentially 24/7 markets come to equities like you're talking about. How do you think finance evolves? Generally, like the more liquid market here, we're removing intermediaries, we're bringing costs down, and it's going to open up new opportunities and new use cases. Does this ultimately, where does the value accrue? I think is my question here. Is it at the asset prices? Does it accrue back to the users? you've been in the industry a while, fat application thesis, fat protocol thesis. These are kind of like the different venues people have theorized are going to accrue the value. Where do you see value accrual in your
one of the things that I'm really paying attention to, you hit on a lot of the key points, right? There's accessibility, imagine 24/7 access to DFDVX, our tokenized stock, which, folks do have 24/7 access to, but imagine a world where that just becomes sort of the de facto the norm, right? That's obviously very powerful. But one of the areas that I'm actually most interested is really composability between, I'm going to say like, on-chain markets and TradFi markets. So I come from Kraken. Before I was at DeFi Dev Corp, I was there for about 3 years. And one of the things that we were very focused on is giving people the ability to express views or trades, like however speculative it may be, but to get like really creative around the ways that they can express their views via a centralized exchange. And when I think of composability, imagine a world where you are able to, place a bet on NVIDIA earnings, but you want to slightly hedge your bet. So you're betting that the data center segment revenues are going to come in light, even though NVIDIA parent company is going to beat earnings. Or imagine you can layer on parlay bets. There are 3 prints in a given night, and you say, I think Netflix, Snapchat, and Amazon are all going to beat, and then you're able to express a trade that way. So for me, like composability is this really huge unlock that I want to see folks talking about a lot more, and where I think there's going to be a lot of value accrual.
I'm glad you bring that up. I was just having a conversation this morning with someone, and we were talking about the convergence between these two markets, these two worlds, and different companies are approaching this in different ways. For instance, you mentioned Kraken. I can foresee a world where Kraken goes public. They also now have their L2 and they have Inc, right? And that may or may not have a token. Then you've got something like a Coinbase. Coinbase is already public. They have Base, and Base is starting to explore a token. And then you've got, companies that could do both, like a 𝘗𝘯𝘵 or a Polymarket, are kind of starting from scratch. I can imagine both of these companies, wish to go public, also wish to have a token and have composability between the two. And so, when you're doing one and then you want to bring the other up, that actually seems more difficult than starting from scratch and doing both at the same time.
Right.
How would you recommend a company go about this convergence when, maybe they're considering a public launch, an IPO, maybe they're also considering an ICO? Do you suggest, doing one and then the other? Do you suggest doing both of them at the same time? What would be, your ideal format if you were to, let's take Solana, for example. Solana's got a token, right? How would you go about maybe taking Solana public and then building out some composability effects between the Solana token and the Solana equity?
Yeah, we joked that we took Solana public a few weeks ago when we did our NASDAQ bell ring at the end of August. We said the public ticker is DFDV. But no, look, all kidding aside, we've had this vision of being the bridge between TradFi and DeFi since day one. If you actually look at our logo, it is quite literally a bridge. And the vision was simply to take TradFi capital and bring it into DeFi, but bring DeFi innovation and returns into TradFi. And I would advise folks to probably just find the easiest low-hanging fruit, but don't be afraid to experiment. It was one of the things that we did fairly early on in the month of May. And it's funny because looking back at when we were setting up all of our on-chain integrations in May, there were a lot of people who were asking, like, what the hell are these guys doing? Like, why aren't they just doing the MicroStrategy thing? Like, just go and focus on the capital raising. And we sort of viewed all the various foundations that we set in May as being really integral components to this idea of becoming the bridge. So to give a concrete example behind that, we go and we raise money. We use that money to purchase Solana. We then deploy the Solana on-chain, stake to our own validators. All of that deployment then flows back to our traditional finance ordinary equity investors via SOL per share growth. So there's a literal connective tissue that we are serving between bringing, as I mentioned, TradFi capital on chain and bringing those on-chain returns back into TradFi. The most concrete example that I've been giving folks is we have a liquid staking token, DFDV-SOL, issued by Sanctum, and we are able to mint DFDV-SOL, right, to retain liquidity across DeFi. You can stake to our validator. In our case, we can mint DFDV-SOL, borrow on Camino against DFDV-SOL, take the SOL that we're borrowing, and then go and like restake it. So we've got a looped staking strategy. And, you know, for quite some time, the NIM that we were able to generate on that is somewhere around, call it 1 to 2%, right? And when this becomes a game of squeezing out yields and trying to grow your organic base as much as possible, that can make a very big difference. And is, I think, speaks to the crypto expertise of the company, the desire to want to experiment with things on chain, see what works. You know, we may, we already have deployed stables across DeFi as well, and see what else that we can sort of get out there.
DK, it's been an absolute pleasure having you on. I only got one last question for you, and that is, how much SOL did you buy over the weekend?
I cannot disclose how much we actually purchased over the weekend. You may speculate, and I will say stay tuned.
Okay. But given that you guys are on the NASDAQ, is there public filings or disclosures? Like we'll find out later.
We announce our SOL buys, and we do it very, I'm going to say, like 𝘗𝘳𝘚𝗥 style. So yeah, that's all I'll say is stay tuned.
Purple dots. Awesome. DK, thanks so much, man. It was a really fun chat. Would love to have you back on sometime soon.
Take care, Robbie. Thanks for having me.
Sold to 10,000. Cheers, buddy. Wow. Sold 10,000? He said that's a 50x. Makes sense. I mean, SOL is right around $200 right here. Wow. We've had quite a few Solana bulls. Mert is now a Zcash bull. Benjamin Cohen is now an ETH bull. Solana kind of seems non-consensus. We'll let you guys draw your own conclusions on that one. Obviously, Solana is poised for massive success. Us here at the Rollup, we are non-maximalists. We believe in the best technology to win, and there is different strokes for different folks. Solana employs a very different strategy than Bitcoin, ETH, and Hyperliquid, and several other L1s that are out there, taking a much more financialized and corporate route. They went and sponsored the All-In Summit, which I think was a great move. That's not really something that we would see Ethereum do, but I think, again, Solana is pioneering and forging into the traditional financial world, which ultimately makes a really, really strong benefit, a really, really strong argument for Solana to continue to be a steward. So we're going to get our next guest up in just a moment. We're going to get Jack up. Not sure if Jack is a Solana bull, an ETH bull, or something in between, but we're gonna bring up a fellow podcaster and friend of the show. Let's bring up Jack and have some fun. Jack, there he is. Welcome.
Thank you. Awesome to be here. Appreciate it.
Absolutely, man. Thanks for coming on. A little bit of short notice, but yeah, I really do appreciate you coming on, man. And I'm hoping that we can make this a more regular thing. It's just me today, so I'm glad that I could have a fellow podcaster in the room.
Excellent. Yeah, that should make things easier.
And the team got you set up behind the scenes. It wasn't too tricky. We had a nice, smooth onboarding.
No, I just had to lift up my laptop a little bit. Had to center.
Cool, man. Well, I am curious to learn a little bit more about your takes, because you, like us, have had several experiences talking with the best and brightest in the space. We as content creators and hosts tend to see things from a higher level view, which I think is a blessing and a curse, right? We don't get so zoomed in and so deep on one particular topic unless we choose to, but we're able to draw these connections between different parts of the space, whereas traditionally these things are so tribalistic and so closed off, they don't really see the connections between the space and generally where it's headed. So where do you find yourself kind of mostly sitting? Do you find yourself in Solana camp? Do you find yourself in ETH camp? Where has been, kind of the majority of the conversations that you've had?
Well, I think it's always interesting to kind of chase the trends, chase the narratives, right? So an example of that would be, recently kind of AI, where I don't personally have any expertise in AI, but, listeners and the space moved towards AI. So I found myself, pulling on more kind of AI threads and moving in that direction, just because that's where the attention, that's where the capital is flowing, right? So I guess kind of the market to some extent tells us kind of podcasters where we have to end up, right? So that's a clear signal, if the audience is asking, if people are reaching out, if people want to be on the show around a specific kind of vertical, then that's a signal that we need to be there. And it enables me to cover and learn about those topics as well, which is rewarding and interesting.
Yeah, absolutely. I mean, crypto AI, I think is still, someone said it's like the biggest like pool of grift that you can possibly tap into. It really feels like underdeveloped at this point. But I mean, generally this is where emerging technologies are going. And I think we're going to see a lot more of it. Is there any projects in particular that you've seen that like really stick out to you? These are guys that are doing it the right way. They're not just, being buzzword capitalists. They're actually, employing this to the best of its abilities.
Yeah, there's definitely some interesting themes I've seen that really feel like they apply well to crypto, right? So, I mean, you look at like the GPU space. I think that for that to exist on decentralized rails makes a lot of sense. I think that a lot of applications of fully homomorphic encryption, FHE, makes sense to, as a big unlock for crypto rails, specifically as they kind of pertain to agents. However, I think we're in a really early stage where it remains to be seen. I think what happens probably is, the first to market tend to be the people who have the less developed products, right? So they're eager to launch a token because they want to capitalize more on narrative than, actually building and developing businesses. So I think that's why we kind of tend to see early grift and a little more evolution later in the space. But I do see a lot of potential in the technology, as it's relevant to crypto.
We call those guys bull market warriors.
Exactly.
Those are the guys, they come in, it's a bull market. They can put together a couple buzzwords and a pitch deck. And the next thing you know, their token, is launching at a $4 billion FDV. Whether those guys stick around and their investors stick around with short vesting, usually we see how that plays out. But then, you also, and I think we had like crypto had that era early on too. And now I like to see a lot of the founders that are coming in now, and it really feels like we filtered out a lot of the noise. The people who are coming in now, they're higher quality founders. And we're seeing that on our fund side where, a lot of these guys coming across, they have experience either in TradFi or traditional tech, maybe experience in SF when it comes to AI. And they're now employing that experience in crypto because like their filtering mechanism has just taken place here. Yeah, go ahead.
To be fair, I think some of these founders are well-intentioned and then realize that, the space isn't ready or there's technological hurdles. I think that it's possible that founders need to see the early wave of adoption and then, base their kind of strategy and product on what has kind of worked and what has kind of failed. So I do think it's kind of necessary creative expansion and destruction. I don't think it's all bad. Obviously, there's some poorly intentioned people and extractors that mix in, but to me, it's all part of the beauty of this like chaos of crypto that we experience, right? Is these people coming in, trying ideas on permissionless rails, and some of it works, some of it doesn't. And sometimes people get burned and sometimes there's massive opportunity. So I kind of love it.
Yeah. You also were in Asia. We were out there. We had a good meeting. We were both doing a bunch of podcasts. I'm curious, who did you get a chance to speak with, and what were some of the key takeaways that you had?
Man, I did 14 podcasts, so it's hard to remember. A couple notable ones. It was fun interviewing OSF of Wrecked Drinks. That was a really novel concept that, they're doing some interesting stuff around marketing and branding and crypto's distribution. Obviously, the perp dex thing is huge.
Cheers to Wrecked.
𝘗𝘳𝘵𝗬, those guys came on the show, this market making transition into, participating in the perp dex wars. Too many to count. Reserve protocol is another interesting one where they're kind of trying to solve index, these index, like they call them DTFs problems, and expand into this world reserve currency. So this plot arc of reserve has been quite interesting. As far as takeaways, like I see these founders, I'm not sure, maybe you see this as well, but these founders just kind of like beating their head against the wall, trying to achieve product market fit. And for me, that's actually a very bullish signal, right? Where previously, you walked into a room and a founder would be like, oh yeah, I got this multi-billion-dollar FDV, we made it, I'm a unicorn founder. Now we're seeing founders who just look beat up, worn down, and you see them kind of chasing product market fit. And I see that as bullish for the space, kind of on net, right? It's people in the trenches working every day to solve customer needs, to work towards product market fit, and to build real businesses. And I think some of them are going to fail, but I think on the other side, it's diamonds, right? Once these people do reach these kind of more traditional business benchmarks that crypto has kind of not seen entrepreneurs work towards, once we see that, is like the 0 to 1 moment for crypto. So I'm bullish on founders that are just fighting every day, and I saw it in Asia.
Yeah, dude. And like the Asia market is just a completely different world. I like to think it's like really, it was really vertically integrated out there, especially in Korea. They had Kakao like maps, and you couldn't use Uber, you had to use like their system. Right. And I think we're seeing this trend play out as well, these vertically integrated ecosystems that are now just building out a more well-rounded experience. And if they have one thing that, has product market fit, now they're adding these auxiliary products on top of these things to just milk the LTV out of their customers. Once they have distribution, they just keep feeding these guys more and more products. And we see the winners win as a result of this. They're compounding the same distribution that they have.
Absolutely. I think Grab, like the taxi and food delivery app in Singapore and Southeast Asia has crypto integrated in some capacity. We see this all over the place. I think you can probably pay, to ride the bus with crypto, tapping your phone. And I don't know, for some reason, payment rails are a bit more entrenched in the US. I think I tend to see that, but there's a massive opportunity for just simplifying payments. It's huge. And it seems like the East is a bit more willing or a bit more quick to adapt to that opportunity. Yeah, man.
I'd love to get your takes on some of the institutional things. I think we're gonna work on the screen share, see if we can put it up and get your take. But in the meantime, yeah, I think what you're describing is like, it's another trend that we're seeing as we kind of recover from this weekend crash. People are kind of picking up the pieces and seeing what's left. I kind of think that we're seeing this divergence. We're seeing some of the more sophisticated players in the industry kind of understand like, okay, we survived. We're making things happen. And we're gonna, maybe tone down the risk a little bit and maintain sophistication. And then on the other side, we're gonna see people try to make it all back in one trade. Like we're gonna see like pure alt season on like really esoteric ecosystems as a result of this. So I'm just curious where you think this shakes out. Like, what are some of the ecosystems that you think are maybe flying under the radar right now, but could get quite a pop as we kind of get this return to the mean?
Sure. I do want to pick up on one part of this question that I found interesting in kind of the Asia tour, right? But it's kind of like the cultural variation around what people are doing in specific, geographies. So I didn't really know this, but like the Koreans are massive leverage traders, and they're trading these, like they're scalping on 40x leverage, these little swings on DeFi projects or L1s you've never heard of. And I know they have like a degen reputation. Singapore seems to be a little more risk averse, trading these kind of major alts. I know Hyperliquid is tremendously popular in Singapore. Singapore seems to be more locked in on like kind of the pre-sale token meta. They seem to know a lot more about plasma, stuff like that. So it's interesting to see different phenomenon play out in different geographies. You know, to be fair, I think kind of the meme coin thing is actually very US focused, if I had to guess, and for some reason it resonates more with US players. You know, the trenchers tend to be US based for whatever reason. So that's really interesting. As far as narratives, I do think we see the shift to kind of, you know, more quality alts. I think the perp narrative has definitely kicked that off, right? Tokens that are biddable after we've seen just like, you know, altcoin market cap be decimated over the last 2 years. And really, I think that's kind of what crypto is, right? Bitcoin, Ethereum, obviously giants in the space, obviously represent a majority of kind of the value created or the value, you know, of assets in the space. However, most of what we talk about on crypto Twitter, for example, are alts, right? So I think when alts go down, crypto feels like it's in a bear market, even if Bitcoin and ETH are pumping, just because most of what we debate about and talk about tends to be DeFi, tends to be AI, tends to be memes, or, you know, the narrative of the week.
Yeah, I think so too. That's what the sentiment holds, and that's especially what we saw over the weekend. Bitcoin and ETH pretty much held up for the most part, but alts got decimated. Let's see if we can get some of the recent happenings up on the screen here, and I want to get your takes on a couple of things that are a little bit more institutional focused. So if you click on that in the show, you should be able to see what we've got up. Super State we had on the show yesterday, and these guys are doing some really cool tokenization things. Partnered with Backpack to bring on-chain equities. Eligible non-US investors will soon be able to trade real SEC-registered public company shares. What do you make of this convergence? Like, once we get equities that are available on chain, do you think there's going to be a possibility where we have more and more of this move on chain, or do you think, like, who are these products for, do you think?
It's a good question. I think people, I've lived abroad for the last 4 years. So, you know, in Europe, in Mexico, spent a lot of time in Asia as well. I think high net worth individuals do tend to have access to US equities. I think it's the middle class that probably are curious about investing in these types of products where they don't have access. And I think the market is probably a little smaller than people tend to think. However, I think there's obviously like a reg arb opportunity. I mean, there's 1 billion Chinese investors that I think don't have access to these products. So I would say I'm in massive support of just access to financial products. I think anyone should be able to buy the S&P 500, or for that matter, to be able to buy Chinese equities, right? So I think that's a huge unlock for the space. However, I do think most investors, you know, maybe 80% of the size of the market does have access to the kind of equities that they want to have access to. Still 20% is a big unlock. And I think there will be some winners in the space, kind of like, you know, we talk about the on-chain Robinhood, right? That's kind of the theme that people are going after for capturing these kind of retail investors who want to buy equities, but don't have access via traditional rails. Exactly.
Retail investors abroad feel it. That, I think, is the demographic. And I think you're right. You know, it's a natural next step after the stablecoin proliferation, which we're seeing play out. This administration has been really hell-bent on issuing more stablecoins and getting that circulating stablecoin number up into the trillions. Besant has said, you know, 3 trillion by 2027 or 2028. And once we have the US dollar in the hands of people worldwide, that's when it feels like, okay, there's going to be some second order effects that take place as a result of more people having stable coins. And it feels like, well, what's the next best after the US dollar? What's the next best US export? Like, we import everything into the US, right? We get it from China, or we get it from India, and we bring it into the US in terms of like these commodities and these consumer products. And the only export that we have for the most part is the US dollar and financial products. That's kind of where I'm going with this. Is the next best US export is the S&P. And so once people get their hands on the US dollar, then they're going to want their hands on the next, the next best financial product coming out of the US. That is our main export. And I think we're going to start exporting the S&P. We're going to start exporting more financial products. Maybe it's indices, maybe it's American tech stocks. And these are the things that the broad retail market abroad is looking to get their hands on. That's where the demand is.
Right. I think there's an interesting note here is I interviewed Murad, the meme coin king, last year and in Token 2049. And I think that the S&P 500 is actually one of his kind of cult-like assets that he talks about, right? It's grown this following really, right? Where you go on Reddit or whatever, you go on Twitter and it's, what do I buy? What do I invest in? And people say the S&P 500. Not everyone has access to that product, right? And I think Americans underestimate how popular that product could be worldwide, because in Mexico, people tend to invest in Mexican assets. In Europe, it's a meme. Europe creates 1/100th of the unicorns that the US does. I don't know. Don't quote me on that. But it's just a fact that U.S. stock market returns are much higher than other geographies. So it's reasonable to think that people want access to those products, and once they're tokenized permissionlessly, and I can buy it in my crypto wallet, that those products will become much more popular. I think it's attractive to U.S. issuers as well, right? They want to tap into those markets. Even marginal growth in those markets is pretty meaningful for them. So I think it could be a slam dunk in certain geographies.
Oh yeah, man. One thing that we're just getting in the newswire now is Coinbase to list BNB, and so
wow.
This was something that I don't think we had on the docket, but I definitely want to make sure that we talk about, because I'm sure you've seen. So Leo, let's go back to just the speaker frame here. And I want to pull this up so that we can get some commentary from you on it. Obviously, I'm sure you saw CJ from Limitless. He was absolutely slamming CZ. He went full whistleblower and basically doxed the Binance listing criteria. This is how much in supply you need. This is how much in cash you need to pay in order to get listed on Binance. Coinbase was like, just list something cool on Base, just build on Base, and that's it. And so CZ, attacked CJ. CJ attacked CZ. And one of the things was like, on Coinbase, they were getting attacked because why don't you just list BNB if you're so high and mighty about your listing criteria? It's the third largest cryptocurrency. Well, bang, they just listed BNB. What's your take, Jack?
Well, I think we're seeing a lot more kind of boldness, right, from the U.S. side. I think there's a bunch of implications. This is kind of a crazy event to happen, while I'm on stream. But the first one is we see Coinbase being willing to list the asset, right? So I think previously Coinbase would have been much more hesitant to list an exchange, a foreign exchange asset. But we're seeing, I guess the meme is kind of like crime season. Players being emboldened to do things that they wouldn't have done under other regulatory environments, right? So that's kind of part one. I think part two is actually, the demand for the BNB ecosystem, the play that BNB is making for the West, and I think this might play into these kind of CZ pardon rumors, right? I think, if we check Polymarket, it's like 43%, probably much higher just based off of this news. But the idea that CZ has transitioned from criminal in Long Beach prison to someone who's who could potentially get pardoned by the Trump administration, pretty crazy to me. I guess, what did you think BNB was going to be listed on Coinbase? I mean, the fact that they're a competitor is pretty crazy as well, that they're willing to list a competitor. I mean, respect to Coinbase, honestly, for democratizing access to these assets, right? They're saying, hey, people should be able to buy what they want. We're just a conduit for that. So cool to see Coinbase do that as well. Yeah,
absolutely. I mean, I have a similar take. I just on your CZ pardon thing, and I think we will get a prediction market up from 𝘗𝘯𝘵 here in just a moment. I also earlier was saying that I thought CZ getting pardoned was the biggest threat to Hyperliquid because CZ's got it out for Hyperliquid. And now CZ's getting attacked from all angles. Hyperliquid had no downtime. Binance had downtime during the flash graph. Coinbase is now attacking Binance, and they're getting attacked for their listing process. And Coinbase looks like the golden child. So I think this is going to potentially be a kill shot for Binance. We're going to see how it plays out. I think we have some more things here that we can put up on the show. Yeah, let's get our screen going again so we can get some more accurate reactions here. Coinbase has added BNB to the listing roadmap. Huge. Next, I mean, this just opens the door. Next, they're going to add Hyperliquid. I think this is like it's given now. It's inevitable. And I just think, look, this is a win for Coinbase. People might say, look, this is a win for Binance. You're going to get listed on Coinbase. No, this is a win for Coinbase because they're showing how flexible their strategy is and how they're not going to just bend the knee to the CT drama. Yeah.
Right.
Yeah.
Well, really, I mean, it's a bet on the fact that ultimately it's going to be all assets available to all people, right? Like the original, promise of crypto, really. I think the influence of exchange listings, where previously we saw, the exchange listing pump, I think that is kind of going to approach zero. I think that's not going to be as important in a couple of years because the average Coinbase user is going to have access to pretty much any asset. And this is just kind of maybe one of the early dominoes that's falling, right? Is Coinbase just kind of taking a position as, yeah, you can buy anything on Coinbase and we're not going to be a gatekeeper for that.
And this is sending the signal to all the new projects and all the builders out there. Like, we're not going to gatekeep our exchange. Any asset that's available on chain, they're going to put in front of Coinbase's users, which I think is, yeah, I don't know the exact number of users, but I know it's several million that have accounts on Coinbase.
And actually, with this timing, as you're mentioning around Binance drama around listing, they're kind of taking the exact opposite approach where Binance says, I need X% of supply to list. I'm going to be very, very exclusive about who I list. Coinbase is choosing to be open. So kind of, a gauntlet thrown towards CZ and Binance saying like, hey, we're taking a different approach. And I think it's one that's more crypto native, that focuses on crypto ideals, and that ultimately will play out across the space.
And now Binance is taking it from all angles. Mike Dudas confirmed with double-digit teams that they've received the same Binance token supply proposal for listing in TGE. Binance wants to take nearly 10% from every innovator in the crypto space who launches a token. 10x worse experience than TradFi. Enough is enough. We think TradFi is extractive. Meanwhile, Binance is out here taking 10% of everyone's outstanding shares.
Yeah, I mean, I think recently there's also been kind of drama about IPOs in the TradFi space and that IPOs don't make sense. And we're gifting value to a set of insiders, this IPO pump. I have some takes on this, but I don't know. Is it possible that we see TradFi companies that have nothing to do with crypto eventually kind of doing something more akin to an ICO or, listing on chain that people will not tokenize equities, but people might list directly as tokens? Is that possible in a 1 year, 5 year, 10 year horizon? I hope so.
Well, man, I was just having this conversation this morning. I really think companies are headed in this direction. Kalshi and Polymarket, I think, are both going to take this approach. And I think they're actually in a more advantageous position because they haven't yet gone public and they haven't yet launched a token. Take Coinbase as an alternative, for example. Coinbase has already gone public. They already have this outstanding public equity that's out there on publicly traded markets. But now they want to go and list, they want to go and launch a base token. And so now if I'm a Coinbase shareholder, I'm thinking to myself, I want my base token. Like, if I'm a Coinbase shareholder, I essentially own Base. I own a stake in Base. They're going to go and launch this token. I better get my Base airdrop, right? I better get, the equivalent stake in Base for owning the Coinbase stock. The companies that haven't yet done either, I think, can take a much more holistic view, and they can essentially create this fungible experience between equity and token. I think this is going to be the holy grail, and anyone who has yet to launch on, a publicly traded market or, do an ICO or an IPO, I think they're going to be in a much more advantageous position. And we're going to see tokenization companies, I think, start to do ICOs and IPOs like in a combination format and list these publicly composable products, which ultimately I think is just going to blur the lines between crypto and TradFi even more.
Right. I mean, look at Polymarket, right? With the NYSE investment, insane. What does that mean? I think Polymarket has kind of confirmed a rumored token. I know there's airdrop markets around Polymarket. I don't know what if that complicates matters around, whether they're going to issue a stock or a token. I also think Kalshi is a great example where it's kind of more coming from the TradFi side, but maybe will issue a token, maybe prefers to issue a token. But yeah, it's just kind of this blending thing.
Yeah. Well, here's Kalshi on the market for will President Trump pardon someone this year? Obviously, CZ is leading the charge. It's a 50-50 shot. Has come down a little bit since the peak. It looked like maybe it was just about 50%. Now it's down to 47. I really think that this is going to just make waves. Like, we're seeing Binance and CZ take shots, but President Trump is still a 50-50 chance of pardoning this guy. Maybe we'll wrap on this question. How do you think a CZ pardon could affect the Binance market share of centralized exchanges and decentralized exchanges? Maybe Binance right now, has, I don't know what their market share is when it comes to the trading volume, but do you think their market share rises or falls as a result of CZ's pardon?
It's a great question. I mean, the easy answer is that Binance market share rises upon a pardon, but it looks like it's more complicated, with the falling odds of CZ's pardon on maybe a Binance listing. It's hard to tell kind of what time frame that's on. I think the bigger question is, look, we've got CZ number one, and then 𝘂𝘵𝘂, big crypto Bitcoiner, second. It just underlines the importance of crypto to the Trump administration, and thematically how much I think crypto is going to be a part of TradFi, Trump token, World Liberty Finance, right? Like, it's all blending, it's all accelerating, it's all combining. Just the fact that these markets exist, right? On crypto rails, like we're experiencing the crypto singularity, right? It's taking off in the way that we always anticipated, but maybe never expected. And I don't know. It's exciting for the space. We're seeing institutions, we're seeing the president adopt these technologies. It's inevitable ultimately. And it's an exciting day to be part of the space.
Yeah, it's pretty insane. We saw Ross Ulbricht, which obviously a big Bitcoin pioneer early days. He got pardoned. President Trump is just doing things to appease, crypto voting base. Binance, for the most part, it kind of exists, on the periphery. And so if he does pardon CZ, I'd be curious to hear what his rationale is. Why would he do this? Ultimately, I think you're right. I think it would be to somewhat benefit the market landscape for centralized exchanges. But if this is going to allow Binance to come and take more market share in the US, it would take it away from Coinbase and Kraken and these companies that were homegrown in the US. So really, really tricky to see whether or not this is going to shake out. But I think if anything, it's exciting to watch. Jack, thanks for coming on, man. It's been an absolute pleasure. And, I really do would love to have you back on here sometime soon, and maybe continue to trade some takes on all of the things that are unfolding, because there's certainly a lot happening, and it's a lot to unpack.
Excellent. Thanks, Rob. Been an absolute pleasure.
Cheers, buddy. See you soon. All right. Coinbase listing BNB, pretty insane. Guys, check out Jack's pods if you haven't already. We had his handle up on the show. It's at Jack Newald. And he's got a bunch of great content out there. You guys may be seeing more from him coming up soon. All right. we're going to keep things rolling. Our next guest is going to be our guest for Money Moves Fast. We're going to go stand up here just for a quick moment, and then we're going to flip over to Money Moves Fast and get John from Polygon, the new recent hire from Stripe. We're going to be talking about why he left Stripe to decide and why he decided to join Polygon and embark on a RWA and payments focus for Polygon, coming up next on Money Moves Fast. We'll see you guys soon. Welcome back to Money Moves Fast. Today we have the pleasure of speaking with 𝘗𝘠𝗦𝗏, one of the recently hired people over at Polygon as the Chief Product Officer. A long storied history in the space, also coming from Stripe, some experience at 𝘰𝘮𝘬𝘐𝑚𝑛𝑎𝑡𝑜R. We're going to get through all of that. It is an absolute pleasure to welcome John to the show. Thanks so much for coming on, John.
Thanks for having me, Rob.
Absolutely. John, it's your first time on the show. There was quite a bit of noise when Polygon hired you because Stripe kind of has their inner dealings in the crypto space with payments as well. The rise of stable chains and stable coins, certainly hot right now. I'd love to start with a little bit on your background. Maybe you could just tell us your story, where you came from, how you ended up at Polygon, and why you chose Polygon to bring your talents.
My background is primarily in tooling, enterprise tooling, consumer tooling, product building. I had a 𝘰𝘮𝘬𝘧𝘰𝘬𝘀 startup that was doing high-speed data transport that got acquired by Facebook. I ran a lot of the internal information tooling at Facebook, ultimately building the workplace product out in London. I ran news for a little while over there from a local standpoint here in New York while Trump was getting elected, which is pretty wild. And I left and I came into the crypto space for a little while with a startup of my own that was doing wallets and NFTs early on. Really learned about it from a developer on my team at Facebook who was just super excited about Ethereum and got me really excited about it. And then ultimately got to Stripe because after that startup, I wanted to stay really close to crypto and the ecosystem. But I really felt like there was a gap between sort of TradFi and merchants and payments and like what all of this amazing stuff that was happening in the crypto ecosystem. And Stripe just felt like the right place to go. It felt like an organization that had like a long list of merchant relationships. It's a technology company that's building into payments as opposed to just sort of a payments company that's trying to add technology. And, I showed up there probably at the bottom of crypto sentiment inside of the organization. This was just after the FTX collapse. And, at the time we weren't really sure inside of Stripe, like what we were going to do with crypto, whether or not it was going to have much of a future. And, put together a really great team over there. And we just took kind of crypto and we made it as close to Stripe's native vision as we could. We ultimately built out the crypto payments capabilities, the payouts capabilities, ultimately stable coin storage accounts, which started to allow Stripe to be available globally. And then, all of this sort of topped off as sentiment started to increase and as usage started to skyrocket with the acquisitions of Bridge and Privy, which were quite recent. And I think everything after that's actually pretty good public record. Up until then, I think it's a little bit of a hidden story and we can dig more into it. And so listen, with all of this happening and everything going, super well, Stripe really leaning into the space, the whole world really leaning in, I just wanted to get as close to the metal as I could. And Polygon was the first stablecoin chain that we ever integrated at Stripe. And so I always knew the team. And when I sort of did my own due diligence around the space and like, okay, where can I go personally really all in on this? I talked to a number of chains, I'll be honest about it. And with Polygon, it's felt like a very strong brand, the right technology stack, the right placement and iteration and progress in the payments space. Seemed to have a wonderful right to win, which I believe really strongly in. Got to know Sandeep and Mark and Mudit and all of the players over there. And it was just I have to tell you the truth, it was a natural fit. And so, kind of capped off this rocket ship of a run at Stripe. And now over here at Polygon, and feel like I'm doing a little bit of the inverse. At Stripe, we were kind of taking a non-crypto organization and mapping it towards the crypto future. Here, we're taking a very crypto native organization and mapping it onto payments, which is one of the most traditional ecosystems in the world. So really, really excited to be here. I feel the same way I did the day that I joined Stripe, which is there's a great right to win, a great brand, and the future just feels bright.
It's incredible consistency because I think you're right. This is two very different paths of ultimately arriving at a similar place. And maybe you can attest to this going back to one of the early startups that you had. You got into crypto very early, like you said, 2011. And so there was always that vision of what crypto could be and what you envisioned for the future of payments. And I'm sure you held that vision when you were at Stripe and you were working towards that. And now coming from a different angle, you're still working towards what that future for payments involving crypto, what that looks like. So maybe just starting broad level and then we'll dig in. Could you just describe to us what is that vision that you have, that end game for payments with crypto? What are some of the characteristics of that system that you envision? And then we'll talk maybe about how it ebbs and flows depending on the perspective that you're coming at it from.
Yeah, for sure. If I back it up just a little bit, to when I was originally attracted, into programmable money, if we want to kind of call it that space, I was really excited about this idea of an open access global network, right, for moving money around and for transacting, and frankly, at very deep down, just connecting people. If you want to map back to kind of life at Facebook, right, we were building this graph of interconnectivity, and crypto networks felt like doing that, but out in the open. And what that really meant is it meant not just kind of creating these connectivity layers that would let people move value between each other, but ultimately making access to that network as low barrier as possible. I've had an opportunity in my life to live in a couple of different countries, move quite often with my family. The practical challenges of accessing money, even in the first world, as you jump between countries, is incredibly high. You find yourself sitting in these kind of dark and scary rooms in banks, justifying your right to open an account. I remember when I was in the UK, the cheapest way to move money from the US was to walk up to an ATM, take money out of my US account, take 2 steps to the right to the depository, at the local HSBC, put the cash back in. And that was like the best FX rate that I could get. Just the silliness of like what it took to just move money from point to point. And I guess the opportunity to fix that problem for myself, and make it easier as I live my life to move around, and B, in doing so, fix this problem for the world, which is that everyone should have access to interconnectivity through finance. And if you want to send money to Africa, or you want to send money to Asia, it shouldn't be any more difficult than making a payment at your local convenience store. And that just, I think too, if you approach the whole space from first principles, if we were building the money system today, that's exactly what we would do. And it would sound a bit absurd for it to be anything but that. But because we've absorbed so much like long-term technical debt, the world isn't like that. So when I think about like my vision for the future, I'm really excited about this idea of a consistent complexity network that stretches globally, that allows individuals to transact with each other at will, at whatever volumes and needs they desire. And the intermediary players, within the smart contracts and sort of the merchants, are all able to compete on a very, what I'd call, fair playing field of value that they can then offer. And I think that very sort of simple future changes everything about the way that we interact, not just with the convenience store, but the way we interact with global markets, and frankly, the way we interact with each other. And so, I think that world is probably closer than I think a lot of folks in traditional finance realize. And I'm excited about trying to make it happen faster.
Yeah. I think about this concept as we continue to improve the technology and we continue to learn more about markets in general. I have this description for it. I call it this market entropy. Maybe there's a better term for it, but it's this tendency that markets have to get more efficient. It's almost like this liquidity is bottled up, and if you kind of unleash it, it flows just naturally. It'll kind of break its container and free form to whatever its shape is. And that's kind of where I feel like markets are headed, where we've kind of kept them bottled up in this Monday through Friday 9 to 5 container, and now we're opening up that to a much broader and bigger place, and we're going to see liquidity just spread out amongst all of these markets. And as these things get more efficient, we're going to remove intermediaries. We're going to end up passing a lot of cost savings back to the consumer and unlocking a lot more value. When you think about the capital efficiency at scale here, and you think about the value that you're providing, the ease of access and the convenience, and I think you called it this fair playing field and this consistent complexity amongst these different markets, what do you think are some of the things that are unlocked? Is it just greater financial access? Is it more job opportunities? Maybe just sound off on where you see this thing going and the knock-on effects as a result of these.
Money access and money movement is at the root of most things that we do in our lives. right? So when we talk about what it unlocks, it's very easy to just sort of take a purist view and say, well, it unlocks just about everything. But I think maybe backing up a little bit and thinking about what it sort of means for this technology layer to really take hold will kind of help us get to the answer to that story. I actually like this metaphor of thinking about like early days of email, right? In the early days of email, it was obvious why email was better to try to get a message from your home, maybe in the States, to someone in India. It was clearly faster, right? But for a pretty long time, it wasn't actually clear that it was faster to get a message to your neighbor that way, right? And so as these technologies consistently improve, we start to get the more clear like access to this like early stage visibility of technology. I think we're kind of there right now with stablecoins. And I think what it unlocks is very similar. In the early days of email, right, like international cross-border like messaging got a lot easier. But I think that's sort of one of the interesting things about the trends around this is we'll have an effect at all layers of the stack of money movement. And that is like large scale sort of global institutional money movement. That's everyday human, like to human money movement. And then that's ultimately going to be like programmatic, small scale, pay as you go money streaming, right? That needs to happen at the like per cent per subset layer. I think all of those spaces get affected by a singular technology layer that can cover each one, as opposed to us having to abstract each one into sort of a product set that makes it make sense to normal people like you and me.
And what this creates is a need for fast, lightweight blockchains, and not just things that can scale when times are tough, but always, because if we're going to put the financial system, it's all composable with one another. That is all one big unified system, and it works in tandem with things happening currently on chain, off chain. These are currently fragmented systems across several industries globally. I want to get into one of the biggest upgrades for Polygon when it comes to payments. They've been investing a lot in this area. They hired you. They're making upgrades to their tech, and so they're approaching the scale of hundreds of thousands of TPS. I guess my first question is maybe you could illuminate what Rio is and what it means for this system in general, but then also 100K TPS or more. Is that what is enough to really take the existing system that is inefficient and put it into a world that makes a lot more sense for modern finance?
Yep. So Rio's super exciting, just to get started. And I wish I could take credit for Rio. I haven't been at Polygon long enough to be able to do that. I think that that Rio is the most kind of exciting payments upgrade that we've seen, because it does two things. It brings this sort of immediate upside of lighter weight nodes, higher reliability, faster finality, lower cost and increased TPS, right? Just out of the box, those things are there. But under the hood, these technology upgrades also lay the groundwork for the scaling that it's going to take. You were just saying it, to get to like 100,000 TPS and beyond. And it's hard to imagine just how much volume we're going to ultimately have to fit on chain in the future. And is 100,000 enough? Probably in the medium term. It's unlikely we're going to go saturate that in the next year. But when we really think about moving, information and the payments related to that information movement bidirectionally on chain, this will be, when we look back in 10 years, this will be step one, because we're going to start to see, as cost drops, it's hard to call things gaseous, right? We'll fill the space, rapidly fill the space. Developers are so good at this. You give them a platform that's more capable, and they'll come up with reasons to fill it. And it will be reasons that we didn't expect. We'll talk a lot about real world payments, sort of everyday payments, which I care a lot about right now. A lot of great human stories behind remittances, how you move money back home to family when you've moved overseas, or like local payments. How do you make a payment in a stable currency in a country that isn't otherwise stable? Like, these are very real, immediate needs we need to go and solve today with the expanded transaction capacity. But when we look around the corner and we start to think about, AI and agentic and programmatic payments, today I think we're still thinking about the world as I make a payment, you deliver me a service, I make a payment, you deliver me a service, I think it's pretty clear what's coming around the corner is that it's going to be pay as you go for almost everything, right? So you deliver me service and I pay you as you deliver it to me, right? And not only that, but a bi-directional pipe where you might also be returning value back to me for the way that I'm interacting with the service. Great example of this is I will pay for access to data, right? When I'm searching or trying to discover things, or whoever my broker is might pay for that, the agent. But then on the flip side of that, sellers will pay for access to me, right? Or like pay rewards back to me for interacting with them. And if you take this down, you can initially say, well, here's $5 here, $10 there, $20 there. But like the more exciting way to think about it is, per bit, right? Movement of data, payments. And we've never really gotten to think of the world that way. If anyone who's run a business and has had to wait for their AWS bill, knows how much of a sort of delayed shock you get with kind of interaction with these types of services. And AI today is that times 100, because the way tokens work, if you're building a startup, is you're pre-buying these tokens and you're spending them down, and then you're pre-buying and you're spending them down. And even what we've built so far for agentic feels that way. So I think we're clearly going to eventually get to a world where that's not how it works, right? Where it is my degree of interaction with a business or a data broker or an agent will just stream, value out of my wallet or stream value back to me as I produce it. And that's going to require, clearly a capacity, that starts to approach this whole gigagas vision of hundreds of thousands of transactions per second. So, it's like bandwidth. How much bandwidth is enough, right? I think this is going to cover us for a pretty long time, but there's more to go.
Someone made the analogy just the other day about how the equivalent of this would be, like a YouTube video. Imagine you're paying upfront for the amount of bandwidth that you're going to use when you consume this YouTube video. It's just the mechanics of the system don't currently make sense. And so streaming, especially as you described, the AI agentic economy, this is where it really comes into play. And this is where we can connect a lot of these services so that they're a lot more predictable. And I think this goes all the way to the top of the way that money is created and then flowing through the economy. I can just imagine, the interest rate environment, the way that money is flowing between regional banks and large banks. This all becomes more efficient and therefore more predictable as we're able to lower settlement times and open up access. And so a little bit more on the technical side, I'm just curious, when you think about one block finality, sub-second settlement, are these some of the technical things that you're aiming for? And another framing here, and this was based off a conversation we had just earlier in today's live stream, is this idea that some of the large incumbent payment networks, they may have distribution. Large banks have lots of networks that they've tapped into, and they have that distribution. But the crypto native teams that have seen where this is headed and they've skated to where the puck is going, they may have the advantage when it comes to the tech. So when you're looking at Polygon stack and you kind of see the sub-second finality, the one block finality, where do you think the advantage really lies? Do you think distribution is going to be the key differentiator here? Or do you think payment networks that have been in blockchain for a while, like Polygon, is their tech advantage that substantial where they can now reach similar levels of distribution, like the incumbent too big to fail banks?
Right. So maybe I'll work backwards through those questions. There's a lot there to unpack, but I actually think a lot of the networks of existing financial movement, these are not really things to always be proud of, right? If you think about how a lot of large organizations move money around the world, they're leaning on these correspondent bank networks. And these correspondent bank networks are complicated. There's sort of these human relationships backing them and these Swiss cheese of risk tolerances that you're trying to force money through, and very low predictability and cost as well as you do it. If you've ever done an international wire transfer to sort of an unusual country, you've probably run into this problem where the amount of fees being pulled out aren't quite what you thought they were going to be. Your bank even will struggle to predict it successfully. Personal story, I had to move some money, this wasn't even an unusual country, but to Dubendorf a long time ago. And it was a small amount, it was like $6 or $7 dollars I had to get across. And it kept showing up with like 3 cents too few. And I ultimately had to just like push a $20 transaction through. I was so frustrated about it. And the Swiss government, I think, is still holding like a debt to me of like, $10 that I'm sure they're furious about. I'm worried if I ever enter Switzerland on like another flight, they're gonna put me in the penalty box at like Border Patrol and write me a check and be like, take this back. But like that sort of stuff, I don't really believe the statement that these like existing financial networks are so great that they're an advantage long term. Mm-hmm. I would actually argue my experience with them has been that they're high risk, and the more we can get away from them, the better. So that's one take on it. Another take, which is maybe related, has to do with sort of sub-second finality, like rapid settlement. A similar problem you get is the delay in settlement, and settlement delay is risk, right? Let's like just take it for what it is. Settlement delay is risk that tends to be solved with credit. That's what you do. If you're getting something instantly, even in the US, if you've ever gotten an instant ACH payment, someone in that stack is issuing you credit and taking great risk on the fact that you were able to receive it, because the bank sure isn't moving the money that fast, right? That ACH really doesn't land for 3 to 4 days. And we face this daily, right, with this like idea. And what that's doing is it's not just causing complexity in the middle of the system, which is showing up as cost to everyone who's interacting with it. But it's actually just like reducing the ceilings of value that can be moved. If you've ever run into sort of an instant ACH payout system, there's always a ceiling. We see it in crypto actually all the time. If you go to an exchange and you do an ACH transfer, right, there's always this kind of value ceiling in terms of what you can move in. It's directly related to the settlement time that you're suffering against. And so you remove that settlement risk, and all of a sudden those value limits go away. And if you want to move $100,000 now, you can do it. And no one on either side has to take great risk. It also does this really amazing thing, which is it opens up the rest of the global consumer base. One of the big things I sort of ran into at Stripe is you can kind of slice the world up into like high risk, low risk, mid risk, consumer bases. And in a place like a lot of in the US, right, we generally consider the consumer base pretty low risk, right? So there's a lot of consumer protection to protect you against bad acting businesses. But there's also a lot of American companies that want to reach parts of the world where the consumer base is high risk, right? And the way you do that, and the way you fix that problem, is you just remove the settlement risk, which is generally where all of the sort of fraud and scams happen, is between the moment of I've sent you, virtual money, you've delivered me real service. And if we can like, I've sent you real money, you've delivered me real service, you can inject a lot of like additional, really trust into the system. And in all of these markets, and it's always terrible to talk about a market as high risk, they're filled with low risk people. I think there's a pretty good argument that the entire loan industry into high risk geos is actually much lower risk than it's priced at, right? And the exposure to that and the delta between those prices has everything to do with taking advantage of the market dynamics in between the kind of first world actor that's maybe issuing a loan, and on the other side, the person taking that loan out, who's more likely to be honest than we think. So maybe this is like a very long way of saying, sub-second finality, rapid settlement is really closely related to this idea of what is this like network we think is working today, and why do the edges of it exist? And so I think it's a huge step function for us with Rio to be able to start really pulling that number down, to like seconds, which is reasonable. You can click a button online, wait for something to happen. It can take 1 second, and that's an acceptable user experience. And just get us away from this like risk management in the middle and all the middlemen that come with that.
As the head of product, you're now onboarding, you're getting more familiar with the tech stack, but you're also at this crossroads between sales, product, innovation, feedback, and implementing the things that you're hearing from the market, and so that the engineering team can ultimately implement those into the product. And so when you talk about the price dislocation with a lot of these loan markets, when it comes to the first world lender, third world borrower, and that could actually be a lot more efficient than we may realize. Where do you start? You guys are making strides in the product and improving the things so that the technology is ready. Maybe if that's the start, what's the next step to ultimately get these things implemented?
For sure. So we have an obligation as an ecosystem builder to deliver the technology that enables creativity from our developer ecosystem. First and foremost, we have that responsibility. And I think Rio, for example, is very related to that. These are obvious, necessary, narrative-driven solutions that if they're not there, in fact, when we launch things like this, my hope would be some subset of developers are a bit surprised it wasn't already present, right? Like that's like often the nature of like a good technology upgrade. It's like, oh no, I was like acting under the assumption that was already there. Whew, we can keep moving. On the other side of that, there's a lot of work to be done, in terms of exemplifying how that technology is meant to be used. And we at Polygon, we have a pretty cool history of incubating the types of teams that go and make that sort of innovation. Polymarket is the really popular one to talk about today. Katana is a recent one on the DeFi space that are coming. And certainly as we interconnect people into like the ag layer and interop layers, there's more and more to dig into.
How excited are you for some of the and I know your specialty is payments, so we won't spend too long on this, but just coming from your history at Facebook, being there during a really interesting time with content moderation and, now coming to this censorship resistant world, how excited are you for non-financial use cases? Like even Polymarket and prediction markets could be considered almost like this truth news sort of media new paradigm. And there's plenty more beyond prediction markets. So, are you excited about any of those potential applications?
Oh yeah, I mean, look, there's a reason I'm at Polygon, which is a general purpose chain kind of behind the scenes powering payments. And what I love about the duality of that is it means the payments can have purpose, right? It's not just I'm moving money and then we're going to do something in the physical world with that. It is I'm moving money and that money gets put to work in many cases. As we go closer and closer towards digital services, DeFi, and frankly, the almost unlimited space of other interesting ideas people are going to come up with in terms of what you do. We talk about like RWAs and tokenized assets, how we collateralize, ourselves in our financial, lives, as well as how we sort of collateralize our like assets in ways that give us access to capital for like growing businesses. That's the obvious stuff from a kind of connectivity and enablement standpoint. I think maybe some of the less obvious stuff is, maybe if you take this kind of Facebook background and kind of the open concept of the graph, is also just the interconnectivity of all of the people who are participating. I was talking to a friend recently who does an awful lot of philanthropy in Europe, and he said, a lot of the reason that you'll make a donation to specific foundations, or historical societies, you're actually also getting yourself sort of access to all of the other people who really value that same like topic or area or piece of architecture or whatever it is that you're funding. And in the past, you really relied on the like charitable organization to help you stay connected to those individuals. But with blockchain, we've found that that's just inherent, right? And we touched on this. I really don't want to go down the NFT rat hole here, but maybe we touched on this just a little bit when those markets were growing, on this idea of this community through like shared action of payment and ownership. Mm-hmm. And I think that community, this is where finance moves, right? Finance moves tightly within communities, right? And then more broadly across the world. And we've lost a little bit of some of these financial communities by losing the physical space. And we've allowed more intermediaries to show up and control our access to the communities that we are financially a part of. And I think I'm really excited to see more creativity, from the market in terms of what am I buying, where am I participating, what markets am I in, and who are the other people who are doing this with me? Mm-hmm. And it becomes kind of a journey together. And, I think journeys together ultimately just become more complex and interesting and deep. And financially, you would expect to have evolving financial relationships with the people who are in those close-knit communities with you. So I'm actually really excited about that whole concept, mm-hmm. right? Which is connectivity with the other people who share sort of either financial goals, interest, excitement, or investment decisions.
Absolutely. And the name of the segment is Money Moves Fast. And it's really cool to hear you talk about how money moves with community and how you're right, shared interests, shared economic activity ultimately builds a community around those practices. And we, there's like-minded people, there's like interest and behavioral characteristics of that group, and ultimately our economic activity will follow. And I think you mentioned NFTs kind of got into that world a little bit. I think prediction markets are kind of on the verge of that as well, as we sort of rally and coalesce around certain sectors. Maybe it's farmers that are sharing information about how they were able to hedge their soybean tariffs against some prediction market, and they're able to sort of learn from one another, but then apply those skills in the market. And I think blockchains are great tools for this, especially when if we think further out into the network state and sort of that concept as well. And maybe just to bring us home here in the last few minutes, stable coins are going to be a staple of this new progression. And as we continue to just really remove the line between blockchain-based finance and the off-chain world of finance, more and more cash in the form of stable coins is moving on chains, and then sequentially from there, RWAs. And I think flying under the radar for most people is that Polygon is the third blockchain as it comes to RWAs. Ethereum has 11 billion from what I'm seeing on RWA XYZ, but Polygon is right there with over 1 billion in RWAs itself. And so when you look at the stablecoin landscape and you look at the RWA landscape, we're getting friendlier regulation. Obviously, Circle, Tether, these are kind of the incumbents, but we've got publicly issued stablecoins, we've got privately issued. This Cambrian explosion of stablecoins is happening. How do you think about the strategy that Polygon is employing to ultimately bring a lot of liquidity and be the hub and the home for a lot of these stablecoins? What is the strategy for Polygon?
Well, look, what we're fortunate about is the fact that it's kind of happening anyway. If you go look at emerging market local coins, which is a whole category of stablecoin that I think is a bit ignored. We're really focused on the dollar right now, but if we want to start thinking about things like on-chain FX and what really kind of breaks down the margins in that space, it's going to be a lot of these local issued coins. Like Polygon's number one right now for the issuance of these new coins. If you're creating a stable coin today, like the likelihood that you're going to create it on Polygon is incredibly high, which is always a good sign, right? So first and foremost, like that is already happening. Second of all, I think this payments focus that we have in the organization has an awful lot to do with the idea that like we are home to a large portion of the stablecoin supply, and we would prefer to be home clearly to more of it. And I think these changes that we're making, these updates that we're making to the chain, what we're starting to see in the global markets and adoption, these are all tailwinds alongside regulation, which we shouldn't get into here, but it's just for once we have tailwinds of regulation in this industry. And stablecoins won't go anywhere. And the greatest thing that stablecoins do for us, in my opinion, is they just keep us on chain, right? If we think about crypto as an electric car, the worst thing we can do is every time we've got to like switch back into hybrid mode and charge the thing back up with like the inefficient gas engine that like doesn't work well at all. We want the Tesla of this space. We want everything to stay on chain, rapid movement, rapid finality. And I will say that Polygon, we have kind of two really fascinating stories here. One is sort of POS and the capabilities of that chain as we build them out. And then the other is AgLayer and the interoperability story, which kind of interleaves with this idea that we have around Vault Bridge, which is kind of the wrapping of these stable coins as you bring them onto your own chain so that you realize the appropriate yield value that you're delivering from a chain standpoint. Like all of these things sort of add up to clearly stable coins have a home on Polygon and across like the Polygon family of products. And I think we're only going to see that increase, both through the technology changes we make and I think through some of the direct product efforts that we employ.
I'd love to hear more about AgLayer because when I first heard about it, and it's been in development, it's continued to progress, but it still seems like a really ambitious and compelling technical solution for interoperability. Can you just say more about how you see AgLayer helping to unify this landscape of stable coins, especially in localized environments?
Yep. So first and foremost, just this idea of interoperability across chains is critical, right? There's going to be more chains. As easy as it would be in my life to just say there will be Polygon and nothing else, the reality is, and we're seeing this more and more over the last 6 months or so, I think Polygon was very early with the AgLayer technology work to start to understand the need for this interoperability. We're going to see more chains. We're going to see more like degree of stable coins existing all over the world. And AgLayer is really meant to be this kind of cross-chain settlement layer that allows you to move money and coins between these chains with zero effort, zero cost. AgLayer is young, I think, is like a really important part of the conversation we have around it. It's this really technically capable and incredibly secure system. And I think it's on version like 0.3.5, right? It's like, this is a young version of it. But we are seeing like a rapid increase in like chain interest and chain launches, and the interoperability kind of capabilities that we're starting to roll out across other well-known chains over the next couple of months. I think we'll continue to solidify it. I actually cannot go super deep into the technical side on AgLayer. We'd have to go and pull like Mudit in from our technical team to really dig into it. But I think where we see AgLayer today operating as a bit of a kind of independent bet, right, in terms of how do we start to get interoperability long term, right? The interoperability story becomes core to kind of the capabilities that we're going to need across the whole ecosystem. So we should hop on another call about this in a month or two, and we can go super deep on AgLayer.
We absolutely should. I think there's plenty of threads to pull, and you've only been there 4 weeks, so I don't want to pull on these threads too much. And you guys have a lot going on behind the scenes as well. So I am really excited because you've been in the space, and you know, kudos to Polygon as an organization for surviving and sticking around, because we've seen plenty of projects within the top 100, top 50 tend to they just sometimes they don't stay around for a long time, and you guys have been able to. And so just with a few minutes left, I'd love to just close out, and maybe you could just share some wisdom that you've collected along the way. You've got a rich experience and history moving through some of these top organizations at Facebook and Y Combinator, running your own startup, and then at Stripe and now Polygon. What are some bits and pieces that have stuck with you along the way about global payments and networks, and just the way in which you're thinking about this space as it evolves?
I think maybe the most interesting takeaway that I've had in my career around this space, and really broadly in technology and emerging technology, is when you're deep in it, when you're a builder, you're way earlier than you think you are. And there's these great interviews with like YC founders, who are operating against blockchain in the early days, who Bitcoin was $30 or something like that, and they were convinced they were too late. They're like, it's over. I'm getting in. It's going to hit $50 and we're done, right? And the reality is, when you live your life a little bit in the future, you actually have to have just a bit more patience than you'd like to have, right? And I think in crypto, this is maybe 10x true. We really think about our sort of forward steps in technology, and we think about these changes we're making as immediate and done as soon as they're present or visible, or version 0.01 starts to exist. But the reality is, that's the first step. And the organizations that persist are the ones that continue to put another foot in front of the other and build and build and build. And we can see this at the ecosystem level today, which is kind of what we talked about a little bit earlier. There are these obvious corridors of money movement, and then there are these like less obvious ones. And it's quite possible the less obvious ones will actually be the ones that change the world. And we're very far away from them. With Polymarket in their recent raise, there are these great messages going on. Everyone on Twitter, right, wants to kind of claim that they knew Polymarket was gonna work before everyone else. But the people who did and who were, understood this kind of core shift that was happening, and they stayed really close to it for the long haul, even though the downturns shook everyone else away. And this is, to your point a minute ago, Stripe could have just given up on crypto after the FTX collapse, and I don't think anyone would have told them they were wrong to do so. Polygon could have just backed off from iterating technology for things like AgLayer and the work on Rio, and people would have forgiven them. They would have said, oh, we got to wait till the market, goes back up and triples and 10x's again. But like, these are organizations, and it's a reason that I'm at them. I go to organizations that I think will stand the test of time, that will continue to build through the downturns. And it's we talk about diamond hands and all of these things in crypto, and it's easy stuff to say, and it's brutal to do. And I think like once you do it a couple of times, you get used to it. And so my biggest learning has simply been to be very accustomed to the idea that we're really early, And all of the ups and downs of the early stages of things will just look like a smoothed line up and to the right when you zoom out in the future. And I think I think it's a shared learning. I imagine you could talk to a lot of other folks in the space who have it. But I think it's really important, especially for folks coming into the industry today, who are really focused on stablecoins, which are very young. Stablecoins have had a very kind of up and to the right progression. And we will have setbacks in this industry, in this space, in big ways. And I'm excited about being able to survive those as well and come out to a higher peak on the other side.
Yeah, absolutely. It's an incredibly patient mindset, and it's also bold to have the resilience to understand that there will be setbacks, to build in the face of those setbacks. And kudos to you to pick and choose such a sustainable path. It gives me confidence that this industry is going to continue to forge ahead, because people like you are at the helm of some of these organizations that are pushing the frontier. John Egan, Chief Product Officer of Polygon, thank you so much for coming on. It was a pleasure.
Thanks, Rob.
Bang. We're back. We're live. We are back and live. Wow. We go offline. We go off air for 5 minutes. The people are just ravaging us. We're gonna close out the show with a bang. We've got a final guest that is going to join us very shortly, coming from the world of Avalanche, which is certainly a thriving world these days. We've got our team in the back that is just fired up, and we're gonna get John from Avalanche on the show here very shortly. We're going to be talking about all the things that Avalanche has coming up. Personally, Avalanche was one of the chains that I had spent a lot of time on. I remember farming my chickens on Avalanche. This was one of the more fun NFTs that I was involved in. I also brought a bunch of my friends into this world of Avalanche NFTs. These chickens would lay eggs. It was a crazy time back on Avalanche in, I think this was 2021, if I remember correctly. We had a lot of fun, and we are continuing to have lots of fun with Avalanche. We're going to get John up now. John, welcome to the show. It's going well. Man, for a while, the chickens were a great time. We went from digital chickens. Now I'd like to have some real chickens of my own one day. Maybe one day.
Lay some eggs, save some money on eggs. I mean, the price of eggs don't seem to be getting any better, so might as well just get your own, right?
No, inflation rages on. Gold goes up, AVAX goes up, eggs go up. It's a vicious cycle. Man, John, I think that was kind of my foray into the Avalanche world, but you guys have been absolutely cooking. There's been a lot that has happened since the 2021 Avalanche NFTs. Maybe to start, and there's all kinds of things that we want to get into with like regards to the technicals, but also the general strategy at Avalanche. Maybe you could just introduce yourself to start, and then we'll get caught up on what Avalanche has been doing for the last little while in kind of that trough of the market, that 2022-23 era. How you guys were able to survive and continue to make it through, and just continue to build with a renewed focus.
Yeah, absolutely. It's good to be with you today. So thanks for having me. John Nahas, I'm the Chief Business Officer at AvaLabs. I've been here 5 years. So I joined around a month before mainnet launch. So I've kind of overseen the growth of the ecosystem since inception across, and I still oversee all the verticals, whether it be institutional capital markets, on-chain finance, tokenization, payments, DeFi, enterprise, consumer, wallets and exchanges, and all of our international teams. So I think we have one of the things that I'm most proud of is how strong our team is across numerous verticals, but also internationally in different jurisdictions that feed back into the team and work together. So it's been a wild ride for 5 years, seeing the industry grow up quickly. We all have our battle scars and have been through a lot, but I think we've continued to really push towards adoption, and the tech has really been built for that. So our job has just effectively been to just prove what the network can do, highlight the use cases, and find the best partners out there to do that.
Love it. And you guys are also helping to educate the world broadly. As the crypto world starts to eat more and more of the traditional financial world, the work that you guys are doing in stewarding this industry forward ultimately benefits the industry as a whole. And I think we can all kind of rally behind that mission. But you guys have a fairly unique technical view on the way that you believe these things should be architected. I just want to read off one of the things that your Chief Strategy Officer, Luigi, said, which is that blockchain adoption won't look like one monolithic network. We can certainly get behind that, being proponents of modularity ourselves. It'll look like millions of sovereign L1s. I'm curious what this means in practice. Again, coming from the world of Avalanche and kind of the 2021 era, and as you guys have evolved, it's no longer just, Ethereum L2 sidechain days. This is a fully mature ecosystem. So maybe you could just kind of, bring about like what the evolution has looked like. How has Avalanche evolved over recent months and years?
So I'll give you kind of the vision, and I'll give you kind of in practice what we've done to make that a reality. I think Avalanche from the beginning, from the ground up, was built with this mission of kind of hundreds, thousands, potentially millions of chains all working in unison, right? So you have to think of the Avalanche ecosystem as a collection or a network of interconnected blockchains. Think of each chain kind of being purpose built for its own asset class, jurisdiction, use case, enterprise, or whatever, or compliance requirements, and kind of the C chain being that liquidity hub, but like kind of the conductor that allows for these assets to move across and have the support that we spend time doing integrating the C chain, whether it be exchanges, wallets, anything else. Those L1s can move assets there. You can have a unified hub for liquidity, trading, data, and whatever it may be. But each business, each asset class, each requirement will have its own chain. I mean, I've been doing this talk for over a year now called Reimagining Blockchains. And effectively, if you look at the world right now, I think we're still stuck in a first generation business plan in this industry. We've seen generations of tech kind of improve, but the business plan has been the same. Launch general purpose chain, incrementally faster, better, cheaper, launch tokens the product, try and figure out what to do with it. These are solutions in search of problems. They're not, solutions that help fix problems. They're not giving builders use cases, enterprises, institutions, different asset classes with different compliance, the flexibility and customizability that they need in order to come on chain, right? It's like fit your asset, fit your business onto my chain alongside NFTs and meme coins and DeFi and identity and a million other things. Like, look, I use this analogy a lot. It reminds me of the early days of the internet. This is like AOL. General purpose chains are like AOL. Nothing wrong with AOL. People got rich on AOL. AOL helped bring people online. But there's a limit there, right? There's a limit by having stocks and sports and chat and email and every single thing imaginable on one page. Well, Avalanche is kind of your WordPress or Shopify moment where we really proliferate blockchains for different use cases, different enterprises, different institutions. And in the early days, I mean, of this kind of modular idea, I think L2's caught steam because there was a comfort with being aligned with Ethereum.
Right.
But there's settlement delays. There's not instant finality. With Avalanche, every single chain that's built, that's spun up, purpose built, has that instant finality. And we have infinite scalability. You can just keep adding chains. So whereas kind of the Ethereum ecosystem is an inverted pyramid, where we see these monolithic chains that are super fast and cheap, they're like one pipe that infinitely gets bigger and you shove everything through it. We are more like a highway system with all the lanes going in the same direction, with each lane having its own rules. You're starting to see this now with Tempo coming out with, Stripe, their own chain, and Circle with Arc and many others, right? People are seeing the value in having the sovereignty of your own L1, the security of your own L1, the premium of having your own L1, and the benefits there and the customizability that comes with it. So that's really been the vision from day one. Avalanche was built with that vision from day one. The consensus allows for that infinite scalability of nodes to add many more chains. So I see the world with thousands and tens of thousands of chains, if not more. Every enterprise is effectively going to have their own chain one day. Every institution is going to have their own chain, right? Every startup is going to want their own chain in the same way that people needed and wanted websites back in the day. 20 years ago, if you asked me if I wanted a website, I'd say you're crazy. We now take for granted how easy it is to spin up a personal brand, a personal business, whatever it may be, in minutes. You can go launch a chain in 15 minutes on AvaCloud right now and get on testnet and try it out for your business. And then you can customize it. You also will have kind of this interplay between private permissioned and permission public and public permissionless. And you can see a graduation with people becoming more permissionless or public as compliance and regulations allow. What does that mean for us in practice? We started with the C chain. We started with where the users were and the liquidity was in 21 with DeFi. Right. DeFi Rush, all of that. Then we launched the multiverse campaign to really bring all these chains online. So we had a ton, whether in government, institutional, enterprise, and gaming with permission public chains. And now we have the full kind of complete public permissionless chain edition as well. So you have this kind of full ecosystem that allows for whatever the use case may be and whatever the business case may be to really be spun up in rather quick time.
There's one particular success case that I think I'd love to highlight, which is the FIFA integration that you guys have done. I'm just curious, maybe you could expand and just kind of like explain to our audience what is the integration with FIFA that you've done, and why did they choose Avalanche? In addition to a lot of the parameters that you mentioned, but specifically about FIFA building out this purpose-built chain, what was it about Avalanche that really appealed to FIFA and ultimately
Absolutely.
had them come?
So right now, what's live on their chain is FIFA Collect. That's a collectibles and think about NFT trading of like players. But you also have RTBs, right to buy. So you could purchase a right to buy a World Cup ticket, which is something super cool, right? Like instead of dealing with scalpers and a million other problems there, you can secure your right to buy a ticket. That's super cool. They didn't build a chain. They didn't want their own chain because of this application. That's one application. They don't need their own chain for that. But for their ambitions, they will need a chain, right? I'm not going to speak for FIFA and their future ambitions, but if you could just think about a global brand and a global enterprise like FIFA, wanting their own chain means collectibles, payments, potentially a million other use cases for their millions and millions of users globally, right? Like they're not thinking about what we have today. They're thinking about what do we want to build over the course of the next 6, 12, 18, 24 months, and how do we scale with that? Where do we go? Are we going to have to deal with gas fees competing with other things on a general purpose chain? Or are we going to have our own, environment? Just like enterprises used to have their own servers, right? Before cloud. The same being for FIFA, the same being for other sports. We have a ton going on in sports as well with loyalty and rewards for the Pistons, the Cavs, LSU, and a lot of other, great sports enterprises that we're working with through our collaboration with Uptop. So sports, I think, has really been an untapped segment for this space, aside from just the collectible NFTs. I think loyalty and rewards matter, payments matter, ticketing matters. We have great partners in SI Tickets and TickSpace that are doing great stuff with NFT-based ticketing. The technology, again, right, is supportive of the business, of the mission, of the greater kind of business plan, more so than being kind of the cornerstone of it, which is kind of what we want, right? We want the technology to enable the use cases and the builders to build kind of the companies and the businesses of the future.
Very cool. I love the analogy that 20 years ago, you wouldn't think that every company would have a website. Now it's no brainer. Every company has a website, and it effectively makes every company an internet-based company. This is where a lot of their business
Every
happens.
individual. I could spin up a blog today and become a creator and monetize my own image and my own kind of, voice. Why, in the future, why would your own personal blockchain not hold your identity and your records and your payments and your accounts and everything else alongside of it? I mean, that's, if we extend that thought process all the way out, but
absolutely.
it's not
and businesses
far-fetched.
by nature are accepting payments, and they're transacting, and they're facilitating these financial transactions as a result of buying and selling services or whatever their business is. So inherently, if they're online and they're using money, which all businesses are, they're all internet money is fundamental to this industry.
The ultimate goal is that in 10 years, 5-10 years, people will be referring to on-chain in the same way that they did for being online.
Absolutely.
Those are the rails for the digital future, whether it be data, identity, information, assets, value, all things of value can be tokenized. These are the rails that they'll move on.
So in that vein, I'm curious, what are the asset classes that Avalanche is targeting? Because we know stablecoins are growing. Like we know all of these businesses that are, buying and selling things, they're growing in their adoption of stablecoins. And there's this big fight and race on chain for these chains to ultimately gain more and more of the stablecoin supply. But then there's also these other assets that you're talking about, data, records, whether it's health records or it's driving records or it's all forms of data. And then there's compute. All of these are valuable because they're scarce resources, and they make up these different asset classes. What is Avalanche's driving characteristic or metric? Is it stable coins? Is it data? Is it cloud compute? What are you guys targeting as a really key KPI?
I think KPIs in this industry are a little bit all over the place because the metas shift every 4 to 6 months, and everyone talks about 1 or 2 things for 6 months, and then 6 months and a week later, they completely forget about it and move on to the next thing. So that's frankly, I think why we're seeing a kind of hiccup in adoption. For being an industry, we are still rather new relative to incumbent systems and incumbent enterprises. But we keep doing this thing where we hop onto the next thing. It's really hyper financialization because of all the tokens that are there. But if you really zoom out, our mission from day one is to tokenize the world's assets. So whether it's stable coins, you have the US dollar stable coins, you have a number of them on Avalanche. You recently have KRW1 coming out of Korea, the Korean won. You have JPYC in Japan. We have XSGD, the Singapore dollar, that has its own chain for minting and burning. It's all assets. I mean, equities, we have been already with their kind of hub to tokenize equities in a compliant way. That's been blessed by the regulators, that has the ability to transfer to all chains within Avalanche, but also external to the ecosystem. Ticketing, we're tokenizing ticketing, right? We're tokenizing rewards and loyalty. We're tokenizing car titles with the DMV. We're tokenizing deeds in New Jersey. There's not one specific thing. It's kind of a mix of how do all these assets start to work together? How does one asset class support another? You have cash on chain, that's needed. That's stable coin. But what do you do with that cash, right? Like then you start to build on top different layers. Up until now, it's just been speculative, right? You trade cash for other tokens, you trade it for NFTs. Let's trade them for like real world activity, real world assets, whatever it may be. So it's really looking for where we think the puck is going rather than where it is now. If everyone's talking about stable coins now, if you don't have a stable coin strategy, which we've had for 2.5 years, you're already too late. Yeah. You're just playing catch up. You're playing narrative games. You're playing CT games. Like that's not really where we're interested. That's where we were a 1.5 years ago. That's why you see KRW1 now and JPYC and SNBC and Denson in Japan and all these payment systems coming on chain. These things take time. Right. I think we've done really well at the medium to long term. We've planned ahead and executed well there. We could do a better story in the short term, a better job telling our story in the short term, which we've started to do better of now to kind of bridge those things, right? But effectively, tokenize it all, but make it useful.
Yeah, absolutely. What is the brand strategy? Because another thing you guys have done, in addition to planting the seeds of stable coins and decentralized finance, and it's getting to where the puck is going as the lines become blurred and eventually cease to exist between TradFi and DeFi. This is essentially just finance, and you guys saw that, and you went to where that was going to end up, and now you're ahead of the curve. You've also gone and partnered with brands, and so you mentioned up top. I know NBA partnerships are notoriously hard to get. And you've done collaborations with the Cleveland Cavaliers and the Detroit Pistons. And, maybe these things, just like FIFA, kind of start out as loyalty programs or collectibles, but you've talked about ticketing. You've talked about some of these ambitions. How do the seeds that you've planted with these brands then blossom, and what do they turn into when they're fully developed?
So these things all have a compounding effect eventually, right? Like that's the goal. But to go back to your thing about just everything being finance, I mean, we started with DeFi. We were very focused on enterprise institutional in the early days, but nobody would work with you. You're brand new. Ethereum was the only one there. There was a safe bet. No one ever gets in trouble for hiring IBM or SAP, right? In the software world, you don't get in trouble by going with the incumbent, right? It's you're taking a risk. So we went to where the users and the action was, which was DeFi. That success we had in DeFi then made the incumbent say, well, we want to try that. That the innovation in DeFi and crypto native applications is really a magnet that forces the incumbents to change, or else they have no impetus to change, right? That's why our DeFi team now sits alongside our institutional team. Everything is just on-chain finance, right? There is like CeFi, DeFi, it's all merging, it's all together. We made that change a while ago because that's inevitably where we believed it was going. We're fortunate to be right on that call back then. So when you talk about like the sports and all this stuff and why does it matter, you can start to see a world where you get loyalty and rewards points, and then your tickets go on chain. Then you can use stable coins to buy your tickets, and then your attendance at a game gets you a collectible. If you have enough of these collectibles, then you get early access to a different ticket or a different thing that gets you access to maybe meeting a player or to merch everything starts to become supportive of everything else. There's a cascading effect where assets that are digitized and tokenized in one aspect are supportive of assets or experiences on another. And you start to mix these things all up. Right now, this kind of exists in the world. but it's super siloed, right? You can move your airline points away to pay for a hotel, to pay for coffee, to pay for whatever. But if these things all start to become somewhat fungible and tradable and adaptable to each other and the use cases that they support, you can start to see really cool collaboration, right? So you could see a sports team working with a sports league or with an entertainment company or a broadcaster to share things, right? You can start to see that stuff. We provide the technology that allows these great companies like Uptop and others to do these things, right? But you get a critical mass of teams going on. It starts to become the norm. And the way this happens is, to your point, historically, this was you go to a team, you say, hey, slap my name across something and give me visibility so retail can see my name on an arena or on a scoreboard. That's not really developing business, right? That's like, look at me, we made it, we paid a bunch of money to put our name somewhere.
Right.
What developing business is going to a sports team with a partner and saying, here's how we can increase your monetization of your fans. Here's how we also enable your fans to get more out of their fandom, so that it's not a one-way street with you only maximizing monetization of fans and their habits. The fans also get a reward. So effectively, you're opening up a two-way street, whereas previously that didn't exist, right? Centralized entities hold the data, they hold your patterns, they know what to do, and they know how to target you. What do you get for it? Not much. Well, now you get something, and you can use that something for an experience or a discount or something else in the future. You're opening up the ability for people to own their fandom and to spend their fandom. That's a compelling story to a lot of teams across a lot of different leagues for how they can stand out and how they can benefit and how they can maintain and attract and grow their fan base.
Yeah. And sports teams are some of the biggest brands that exist in the world. And so they have these cult-like followings.
There's
they have
loyalty.
These consumers. They have some of the greatest loyalty in any business sector. And you're kind of describing what I think a lot of teams are going after. Is they're going for the end consumers, and ultimately, I think it's indicative of this broader trend where consumers know their worth. There was some inflection point in there where people started to understand the power of data and big data, and whoever has that really can tap into like the lifeblood of our modern society online. And now consumers understand that, and they realize that if they're just giving away their data for free, they're missing out on some of the opportunities that they could have. And so now these brands, NBA, NFL, these teams, they're realizing they can give more to their fan, and their fan can get more from the brands that they're loyal to.
It's a win-win.
It's exactly,
or at least it's more of a win-win that currently exists.
Yep.
I mean, we're not going to revolutionize this stuff overnight, but incremental success begets more incremental success, and eventually we just take for granted that, oh, this is so much better than it used to be.
Absolutely. And after hundreds, if not thousands, of incremental successes, the thing looks entirely different than it did at the start. And that's how these things evolve. I just want to quickly talk about the maybe other side of this, which is the institutional adoption as we're getting hyper financialized and loyalty programs between sports and artists become fungible and composable with one another. How does TradFi, in the more typical sense of the word, how do they react to this trend from kind of your experience in the conversations you're having?
They're not going to ever do anything that puts them at risk, right? So I think there used to be a time where we said, no, bad regulation is terrible, right? So we just said no as an industry. And then and I think we got to a point with the last administration where it was bad regulation is better than no regulation, because nobody would take a risk that they did something, no matter how compliant they thought it was, that they could wake up one morning on the wrong side of the line. So now we're seeing regulation come through. We're very grateful for that. We're seeing more clarity there. So people are still tiptoeing in. There are some that are more aggressive. There are some that are more conservative. There are some that are still worried, but there are some that want to try. And there's also some that want to say, we are ready to spin stuff up and get ready and have it sit so that the minute we can, we turn on the on switch. Previously, it was, I don't know, we'd spend months doing POCs, and then the POC would then take months to go to some limited production, and then months, if ever, to go kind of larger. We're seeing people that missed the POC train years ago go straight to let's get something out now. We're seeing people that did the POC saying let's skip the middle part and go straight out like quick. We're seeing people that are just saying, forget it, let's go all out right away. Those who can do it will, right? The more nimble, the more fintech oriented, the more tech forward, they will go ahead in. They'll probably make a lot of mistakes, but that's fine. It's better than having them not on chain. But we are seeing a much quicker kind of adoption. Like the adoption circle is speeding up really fast, and we're having a lot of people come to us, particularly with the fact that we can customize chains for their use cases.
Yeah,
it's just that easy. Like, do I want to put my bank's assets or my client's assets alongside all this other stuff on a public chain? Probably not, right? That's just not realistic. All these headlines of, oh, this guy's doing this and that, they're just not going to do it, right? Like, your accounts somewhere are not going to sit in a wallet that's on a public explorer alongside everything else that's happening. There's no compliance checks. There could be illicit activity happening alongside your legal activity. That's not going to happen.
right.
And anyone who says that is just deluding themselves for a nice narrative. But every institution, every financial player is effectively going to need their own ring, or they're going to want to own, right, their space. They're not going to share it with someone else. They're not going to rely on somebody else's. They're going to want their own. So it's a tipping point, right? It's slow, it's gradual, and then it speeds up, and then take 2 steps forward, 1 step back, and then ultimately there's a tipping point where I think it just starts to become inevitable in the norm. Then most people run, every bank will have their own intranet type closed end environment, but that'll connect to other banks. And then you'll start to see networks of interconnected chains emerge in the same way you see SEPA, SWIFT, Fedwire, and ACH networks evolved for payments and bank transfers, the same way you see, merchant processing networks for credit card and debit card payments. These things will start to happen, but it takes time.
Yeah, absolutely. And I think we all feel it, especially in the industry. We feel like there's this inevitability to it. And you're right, there is a tipping point, an inflection point. Once we cross it, it becomes more of a risk to these institutions to not go on chain. Right now, they're looking at, that world, that crypto world, it's risky, it's for criminals, and that's all it's there for. It's risky to go into that world. But once you have the likes of, and this next question I'm going to ask you about, ETF filings from VanEck and Bitwise and Grayscale, Robinhood is going and deploying. You've got all of these financial institutions. Once you have all of those on chain, it becomes risky not to join them and be where all of the other big players are. And so for that, and with that being said, I'm curious, and this we'll get you out of here after this. What is your boldest prediction for AVAX adoption by the end of 2025? Or let's go 2026. 2025 is almost over.
2026, over 200 L1s, maybe 250 at least, processing billions of dollars a day in value across within chains, across chains, and everything else. I was talking to a good friend yesterday, and he made a great point. He said, long gone are the days where people could just brush off blockchain. Like, people used to say things and it would affect stock price positively. Like, you say, I'm building something on chain, or I'm doing something. This is what shareholders want. This is what the market wants. This is where market envisions this process going. So people who are talking about their plans, granted, half these plans are half baked and they say it just because they have to. That's why you're not seeing that adoption as quick. But when people say that they do have plans or talk about their plans, you see that reflected in their share prices. We are now starting to see people who say that they don't have plans to go on chain negatively and adversely affect their share prices. They are being punished for not having an on-chain strategy or an on-chain plan. That's good and bad, because they're going to over-rush to do something, they're going to mess it up, and then they're going to have to fix it later. That's fine. I'm fine with 3 steps forward, 1 step back. Whereas in the past, we're kind of stuck in the middle. For us, 2026 really means proliferating many, many more chains across different asset classes, different industries, different use cases. I'd love to see startup founders build their new companies, whether it be fintechs or neobanks or whatever it be, on chain. Like, they will be the trailblazers creating innovative new applications that don't exist because blockchain enables them to do so. And Avalanche gives them that blockchain capability to do it from day one. I think that's really the big thing we're looking for. That also in kind then inspires the incumbents and the established people to really innovate and come on chain as well.
John Nahas, thank you so much for joining.
Good to be with you today.
Yeah, likewise. This conversation really spanned beyond AVAX. I really feel like we got some nice insights beyond into both the consumer when it comes to some of the loyalty programs with major brands, as well as the other side of this coin, which is the financialization and some of the really significant financial institutions. That
Look, I'll end on this note, right, real quick. I've been here for 5 years, and the reason is because I'm talking about the same things I'm talking to you about today. The reason I've been here 5 years is because I believe that Avalanche is the technology in the stack that can deliver that, right? Like, so we didn't specifically always talk about Avalanche, but everything I'm talking about can be done because of Avalanche, and I think we're uniquely positioned to do that. So it's an exciting time.
Really appreciate your time, John. Thanks for coming on.
Thank you.
Awesome. What a show. This is great. Oh yeah. Cool. Well, we're gonna wrap up here. Let's see. What else do we have? John, you're free to go. I think you're hanging around in the back, but all good, brother. We'll see you next time. Thank you. Very cool. John, super nice guy. Also, AVAX. I mean, just part of the game about crypto is just surviving. You see so many teams just run into themselves and just trip over their own feet if they try to move too fast or too slow. AVAX has been one of the ones that has stuck around, obviously did quite well in DeFi summer 2021. They had DeFi Rush as part of their AVAX incentive programs. And they've just stuck around and continued to build in the space, and it has served them quite well. Now you can see they're partnering with huge brands, and they're pushing the space forward as a whole, which is incredible to see. Guys, tremendous show. I think that's about all we got. Let's see. It's about time to wrap up. Some breaking news that occurred as we were on the show. Coinbase launching BNB coming soon. Superstate partnering with Backback. We're going to start to see private companies have liquid markets. I don't think people are ready for what this means. This means price discovery acceleration. I put a post out recently about what this, there's a big trend that's happening. It's this generational transfer of wealth from boomers to zoomers. Boomers liked the steady growth. I want safe. I want predictable. I want my S&P to go up 1% a day for every day for all of eternity. And Zoomers don't want that. Zoomers are okay if it goes down 5% a day, if it goes down 5% one day, as long as it's going to go up 25% the next day. And now we're getting price discovery in all kinds of esoteric asset classes, and it's providing the kind of price discovery that Zoomers are looking for now this transfer of wealth happening and going into Zoomers' hands. We're going to get asset classes that resemble the type of volatility and price discovery that Zoomers are looking for. So I'll leave you with this take, which is skate to where the puck is going, because the wealth is transferring into the hands of the Zoomers, and you want to be positioned on the side of price discovery and volatility. This is where the puck is going. Guys, thank you so much for a tremendous show. Shout out to all the guys in the back. Leo, great job. Alex, great job. Marcelo, great job. Nero, great job. Andy, not here today, but great job as always, guys. We will see you tomorrow, and we will keep rolling. This is the Rollup signing off. See you tomorrow.